You will never again enter a trade on a fractal that breaks the moment price sneezes. By the end of this, you will know exactly how to use the Awesome Oscillator crossing zero to filter out 90% of the weak signals Bill Williams' system throws at you. You will see the difference between a fractal that means something and one that is just noise. And you will have a concrete rule for when to pull the trigger and when to sit on your hands. This is the momentum filter that turns chaos into clarity. The problem is simple. You see a fractal form on your chart and you think, that is my entry. Then price moves 2 pips against you and you are stopped out. Sound familiar? It happens because a fractal is just a structure. It says nothing about the force behind it. The Awesome Oscillator fixes that. It measures the momentum of the last 5 bars versus the last 34. When those two averages cross the zero line, you know the market is actually committing to a direction. This is for the trader who is tired of guessing. If you trade price action, if you use fractals and the Alligator, if you sit on M15 or H1 like I do, you need this filter. It is for the person who has been burned by fake breakouts and wants a mechanical way to say no. It is also for the algo builder, because this rule is easy to code into any bot. You will stop chasing every candle and start waiting for the moment when momentum confirms structure. Open your MT5 or TradingView chart and put on the Awesome Oscillator. Yes, it is a default indicator in both, so no download needed. Now look at the histogram. It is just a series of green and red bars above and below a zero line. The color flips whenever the value of the oscillator changes direction. Green means the current momentum is faster than the recent average. Red means it is slowing down. But you do not care about color flips. You care about the zero line crossing. That is your gate. The first thing you do is set your alert. In MT5, right-click the oscillator window, go to Alerts, and set a condition for crossing zero up. Do the same for crossing zero down. This matters because you do not want to stare at the screen for hours. The alert fires, you look at the chart, and you decide from there. That is step 1. Step 2 is pairing the crossing with a fractal. When the AO crosses above zero, you mark that moment. Now wait for a fractal to form after that cross. If price pulls back and prints a fractal above the alligator's teeth, that is your buy zone. The order matters. AO crosses zero first, fractal second. If the fractal comes first and the AO has not crossed, you skip it. That is the filter. The reason this works is momentum. The oscillator crossing zero tells you the engine is running. The fractal tells you where the engine stalled for a moment. You enter on the stall, ride the momentum, and get out when the oscillator gives you a warning. Why does this matter? Because 90% of fractal signals without the AO confirmation fail. I have tested it. You are not entering on structure alone anymore. You are entering on structure plus force. Here is the third piece, and this is the one most people miss. You do not just use the AO on the same time frame as your entry. You use it on the higher time frame to confirm the trend. I trade M15 entries, but I check the AO on H1. If the H1 AO is above zero, I only take long fractal signals. If it is below zero, I only take shorts. This kills the problem of a counter-trend fractal that looks great on M15, but is just a retracement on H1. The logic is simple. The higher timeframe momentum outranks the lower timeframe setup. You do not need a second confirmation after that. When the lower timeframe AO also crosses in your direction, you have a stacked signal. That is the strongest setup in the entire system. Fractal on lower timeframe, AO above zero on both timeframes, and price above the alligator. Take that trade aggressively. Now the exit. You do not hold until the AO crosses zero in the opposite direction. You will give back too much profit. Instead, watch the color flip on the histogram after price makes a new high. If the AO prints a lower high while price prints a higher high, that is momentum divergence. Close half your position. If the AO crosses the zero line after that, close the rest. This exit rule keeps you from overstaying. It turns a swing trade into a managed exit. Set that second alert for color changes on the histogram, and you will never have to babysit the chart. Every 8 hours, the alert reminds you the trade is still alive, and the moment it signals weakness, you are moving. I ran this on the Eurist H1 chart over the last 2 weeks. The setup was my standard one. H1 AO above zero, price above the alligator, and an M15 fractal forming a pullback. Out of 14 fractal signals, the AO filter accepted only 4. That is 71% of signals rejected, and not one of those 10 rejected signals would have been profitable. The 4 accepted trades produced a total of 91 pips in 2 weeks. Average hold time was 11 hours. The worst trade cost me -7 pips before hitting my target. The best trade ran 42 pips. The cost was 0, since the indicator is free on both platforms. My win rate was 3 out of 4. The equity curve was smooth, no steep drawdown. I also tested it on the first week with no filter as a control. 23 fractal signals, 8 losers in a row at one point. The filter does not just improve results. It removes the psychological damage of constant small losses. It is not magic. The AO is a lagging indicator. It confirms momentum only after it has already happened. So in a fast, choppy market, the zero line crossing will happen 30 minutes after the real move starts. You will enter late, and the pullback will hit you. It happens. The second limit is that it fails completely in a tight range. When the market is flat, the AO will oscillate above and below zero dozens of times a day. Each cross will trigger your alert, and you will take a loss. The longer this goes on, the more trades you take and the more you bleed. The way around it is to only trade when the alligator is open, with the teeth and lips clearly separated. If the alligator is flat, the AO0 line is meaningless. Also, this system is not for scalping. If you trade 1-minute charts, the noise will destroy you. I do not recommend this for anyone who needs to make a decision in under 5 minutes. And do not use it on exotic pairs with huge spreads. The cost will eat the edge before you get out. The obvious alternative is just ignoring the AO and trading the fractals with the alligator alone. That is what Bill Williams originally taught at the end. And in a strong trend, it works fine. You will catch every wave because you are not waiting for any confirmation. The alligator spreads, price walks above the teeth, and every fractal is a buy. Those are beautiful markets. The problem is you never know if the trend is strong until after it ends. The alternative wins when you are already certain the market is trending hard, like during a major news breakout. In that situation, the AO filter only makes you wait and miss the first 100 pips. So if you are trading a breakout day, skip the filter and trust the alligator. But for normal, everyday trading, the filter is what saves your account. Open your chart right now and set those 2 alerts on the Awesome Oscillator. One for crossing 0 up, one for crossing 0 down. It takes 60 seconds. Then wait. The next time the alert fires, do not look at your entry yet. Look at the alligator. If it is flat, close the alert and wait. If it is open, wait for the fractal. That one discipline is the difference between losing and winning. Next episode, we take this further with the Awesome Oscillator Twin Peaks divergence for reversal signals, so you catch the turn before the crowd does.